We have 2 newly opened short-term rental Airbnbs and LLCs. We want to do cost segregation and do bonus appreciation. It's depreciation, but I get your point. For the 2023 tax year, we are logging our time for the 500-hour rule, which is material participation, if you didn't know what that is. I heard that small businesses should be taxed as S corps to save on self-employment taxes, but others say don't put Airbnbs in S corp because they're passive. What to believe, Jeff?
Okay, couple corrections here.
Bunch.
The 500-hour test, all you have to do is meet the 100-hour test for your short-term rental. And I'm guessing we're talking about spouses. So the way material participation works, if one spouse meets the test, they both meet the test.
You add their time together.
Yes.
So, and there's 7 tests.
Yes, there is.
There's 3 that are really relevant. You did substantially all the activities, so nobody's cleaning it, it's just you. If somebody else is doing any activities, then as long as you spend between you and your spouse more than 100 hours and it's more than anybody else, other individual spends on your property, then you have material participation. Or the 500-hour rule is the, hey, I don't have to worry about what anybody else does. If I do 500 hours, I'm materially participating. Please carry on.
So where they say the S corp, don't put an S corp because it's passive. That is incorrect. Short-term rentals are a trade or business. And if you're materially participating in them, then it's active ordinary income or loss.
But
one of the issues I have with putting any real estate in an S corporation or C corporation is real estate tends to appreciate. And if you ever need to pull that property out, even for something like refinancing the property all, it becomes a taxable event, which you want to avoid.
Yeah, we don't put the property in an S corp. But even if you have a short-term rental and it's a trade or business, that business could actually be passive if you don't materially participate. You materially participate, now it's no longer passive, but it doesn't mean it's subject to self-employment tax. In order to have an Airbnb subject to self-employment tax, you have to provide additional significant services that are similar to a hotel, like concierge services or food or meals. If that's not you, there's no self-employment tax. You don't need the S corp. So if you are taking, if you're doing the cost segregation and bonus depreciation individually, and this is, and you are materially participating in this, you want non-passive losses to offset your W-2 income or your other income, but you do not want it to meet the self-employment test as far as being subject to Social Security taxes. What you just described works. I would just have it in an LLC, taxed as a partnership or taxed as a disregarded entity. I would not use an S corp.
Yep, I agree.
I'm going to make it complicated now, just for a second. If you were not going to meet a bunch of these rules, like if you were not materially participating, then there's a good chance I'd want to keep your Airbnb, the rental property, separate from the business. And I would set up an S corp for the host only, but I'd have the property in an LLC renting it to the S corp. And that way I'm separating it out. My real estate's over here. It's all passive. My active business is my S corp hosting. That's right here. In which case I would separate those out, and then I would have the S corp because I would have a salary requirement.
So are you referring to what we call the master lease?
Yes.
Where I'm leasing long. I own the property, but I'm leasing long to my S corporation.
Yes. And we do this especially for real estate professionals who have other rental properties, but they may have a couple Airbnbs and they may not meet the material participation on the Airbnbs, but they meet the material participation on their rental properties. So then we put the two, like let's say we had 2 Airbnbs, we put them in with the other rental properties as LLCs. They rent long to an S corp. Now all those losses qualify as rental, and it's one of the exclusions is the real estate professional status. I meet that, it's non-passive loss, and it offsets my W-2 income and my other income. So just to make it, throw a little curveball at you to understand that it's not 100% straightforward, right?
Yeah.
Now, if you're a doctor, lawyer, dentist, salesperson making a lot of money, manager, whatever, and you're making a bunch of W-2 income, short-term rentals that you own and manage and you materially participate on become your friend, because you can offset a ton of your tax by doing exactly what this question is. I put those in there, I meet my test, and I use an LLC that's taxed as a partnership or as a disregarded entity. Those losses flow through. They're limited to what is about $500,000 a year. It's 500. It's more than 500.
It's like 540, somewhere around there.
Yeah, it's you have an excess business loss limitation now, and it's like just over $500,000 that you can use. If you like this clip of Tax Tuesday, then I invite you to join the actual show. It's every other week, and you can ask your questions and get them answered live by myself and my team. Just click the link.